Cryptocurrency prices are starting to correct despite traditional markets just marching higher and higher and higher. And I see some fear creeping back into the markets. So, this is the perfect time to be making those decisions, working out where we're going to be going next, and positioning ourselves to capitalize on this secular trend, given that we're bullish on this asset class. I know today that if you're joining me, you definitely are. So, what are we going to be discussing today? The first point that I want to make is that no, I haven't sold everything and Bitcoin is not going to zero. And our memes are definitely not just turning into dust in our wallets. But that being said, should you be taking financial advice from a stranger online? Is this financial advice? No, definitely no to both of those. But if you are so inclined to want to speculate and get some information in the markets, you're in the right spot. So you might ask, why am I qualified to say this? Well, I hate to do this because at the end of the day, it just comes off as dickish, but I do want to show that I have some background here. So I've been in these markets successfully for over 5 years, and I'm educated in law and finance, and I've actually taught macroeconomic analysis and financial modeling at university. So the goal on this channel is going to be to entwine crypto degeneracy with some sound financial planning and modeling and macroeconomic analysis. So if you want to see how these things can play together, you're in the right place. All right, beautiful. Well, the first thing that we're going to be covering today is we're going to identify why Bitcoin is correcting and the main two factors driving price, right? So you do see here that we've had a massive move from when we put in these lows back in middle of 2023, and now we're down about 20% from these recent highs we put in over the last couple of weeks. I'll be addressing where I think the market's going from here and the main catalysts that have driven price. And to get right into that, the first thing to identify is the Bitcoin ETF. So the key thing to realize here is that when you have a new financial instrument like this, which is going to impact price, it's not all bi-directional, right? So it's going to have the potential to be positive both to the upside and to the downside. So we can't just be assuming that because we've got this ETF now, it's always going to be a net positive. Now, what you can see here is that this week has been a stark contrast to the prior trend. We've had beautiful numbers, above expectations, beyond what anyone could expect over the prior months. But this last week, we've seen consistent outflows, all right? So see the first Monday wasn't too good, then the last 3 days have just been down only and actually accelerating. Now, if you look over here, you can see that this is driven predominantly through these grayscale exit, which is an ongoing trend, but we haven't had the ability to offset it through inflows to our other ETFs that are becoming much more popular, like BlackRock, Fidelity. And on one level, this is quite interesting, right? Because we have the idea, look, anyone who's a bit younger or has any level of technological literacy, they would have been able to get into crypto a while ago, all right? Like you don't need an exchange traded product to work out how to get into this market. So people were saying, look, this is institutions, this is smart money. And to some extent, I get that hypothesis, and I do believe it will be proved true over time. But we can see that the biggest days that were put in actually came on the 13th of March, and that was when Bitcoin was making all-time highs, above 70,000. Now we have a nice 20% correction, and crickets, man. Crickets. We can't hear anything. People aren't buying. We've got to see where this trend goes. Now, the important thing to realize, and I see so many people making this mistake, and I want you to actually understand this because it's super applicable to the base way that financial markets operate, right? So focus. These ETF inflows are not actually driving price that much. They are a little bit, but not that much. What is actually driving price, however, are speculators pricing in these ETF flows and using leverage or futures contracts to therefore speculate on the direction of Bitcoin. So let me explain how this works. When people were expecting ETF flows to be much more modest at the start, but then we started to see this strong data of how quickly this was being adopted, traders then began to price in ETF flows into the future. So let's say that we see that ETF flows are 5x more than we'd expected, and then we extrapolate that's going to continue for however long you want to say. Well, I know that I can make a profit then by front running that trend and longing Bitcoin now in anticipation of those future flows. So what we saw when we've had Bitcoin run up massively over the prior weeks here, this isn't actually because of the big inflows per se. It's because people priced in those ETF flows and then front run them. So what's happened on the inverse, right? It's not that these outflows have crashed Bitcoin's price by 20%. That's the wrong way of thinking about it. It does make an effect on the margin because there is selling, but more realistically, it's speculators pricing in the potential for lower ETF flows into the future, okay? Do you see how this is a reflexive loop? And if this does turn positive again, we would likely expect to see prices marching higher. Now, on top of that as well, the second factor that has been impacting the price is, I would say, waning confidence in the expectation that the Fed has completely won the fight against inflation. Now, I'm not going to talk about this too much today because at the end of the day, forecasting inflation accurately is pretty dubious. Everyone gets it wrong, whether you're the best hedge fund manager in the world, the Federal Reserve yourself, or someone like us on the internet. But we can see the rate of decline has completely leveled out, and then we'll be getting some stubborn inflation prints this month. Now, Bitcoin is proving to be incredibly correlated to inflation interest rates, and not in the way that many people thought. The narrative for a while was that Bitcoin is this hedge against inflation, but that's being proven to be categorically false, all right? I'm pretty done with that narrative for now. What it's actually showing to be is a hedge against irresponsible or loose monetary policy. So when people expect central banks are going to be printing money, cutting interest rates, they then fly to scarce assets, expecting the price to increase as the value of the denominator, dollars, declines. All right. So these are our two key factors. We're in a macro-led market where these future expectations of ETF flows and inflation are having a really significant impact on price. So we did see this week, as touched on in our prior session, the Federal Reserve coming out and saying that they're going to keep their borrowing rate in between this 5.25 to 5.5% range. Now, this was completely unexpected, all right? This was completely expected. Everyone understood that the rate wasn't going to be changing. But what did get the market so excited was that the Fed reaffirmed that they're expecting 3/4 percentage point cuts by the end of the year. So that just means they're expecting to cut rates 3 times, which is sort of surprising, all right? Because there's been really strong economic growth numbers, relatively strong employment numbers, and then inflation resurging a little bit. So the question is like, dude, if the market's pumping, why do you need to ease monetary conditions further? You got stock markets at all-time highs, crypto at all-time highs, and many people were pricing in the Fed coming out, being a bit more hawkish on this and saying, yo, we're gonna chill out. We're not sure about these cuts. But they've come out really just relaxed about the current state of the market. I'm not 100% sure what to make of this, but it's important that we keep our eye on it going forward. Now, the really key understanding here is that this statement that the policy rate is at the peak for this cycle. So what that means is that no matter what judgments we make around the edges, I feel safe in saying that broadly over time, we're going to have looser financial conditions, which will support asset prices. All right. And this reaffirmation that we're going to be getting these rate cuts this year is what investors really liked to see. So let's just quickly have a look at Bitcoin now and see where we think it might be going over the coming weeks and months. Right? Well, to do that, we're going to use 3 different considerations. We're seeing that we're in an uptrend. And this is the number one thing I think people fumble because everyone wants to be that short seller that nails that top, right? And like has that fear porn of the market going down. And the same thing is true with bottoms, right? Like everyone wants to call a bottom and be that person that got in and perfectly upticked the low. But at the end of the day, I've found that to be a really poor way to position yourself in markets. And the best thing you can do is to allow the trend to be your friend. It really will be your friend, the trend, if you just allow it to be, okay? So you can see that we're in a massive uptrend here. And realistically, while we're putting in higher lows above this $40,000 level, we're not even at risk of breaking this uptrend. So the macro picture on a higher term time frame is still extremely, extremely bullish. I can't stress that enough. With this indicator here, though, we do see that the volatility is starting to retract. Now, what is volatility? Volatility is just the dispersion of returns, right? The dispersion of returns. That simply means how much is price moving? Is it staying within a narrow range or is it being very volatile? And we can see that we've put in a really strong volatile move that corresponded with this uptrend. So volatility is, as an investor or a trader, is a very good thing if you're positioned in the direction the market's moving. So if you're long, in an uptrend and then volatility increases, that is your upside. So it's not like volatility isn't bad or good. It's sort of just one of those things. Now we do see that it's starting to retract, and that's normal, right? Whenever there's these strong impulsive moves, volatility by definition will end up retracting, and this prepares for the next directional move. So I expect volatility to, broadly speaking, trend down over the next month or two. And what that will probably correspond to is some chop in this range. Now, I think a lot of people are going to get this wrong because they're going to be looking for breakouts either to the top or bottom very quickly, and that stuff's going to get clicks. But in reality, what I think is much more likely is more of this chop, right? So if we stay around this range of the highs and the lows of this move and fake out people at the bottom, maybe test a bit above it with the high, and play this out for a while, I think that's the most likely thing on the market. We also do see on the RSI that momentum has been really high, okay? Now, if this will reset if we chop around for a little bit. So I think we're at the stage of the market where we need to realize we're probably in a new regime. It's what we were the last few months. And now it's time to not get too greedy, maybe think about what positions we want to be adding on. Are there any that we do want to take profits on, and be prepared for a little bit of chop, which is also cool because if you don't feel like you're adequately positioned, I think you're going to get some time to get those positions on over the coming weeks and maybe months. But we'll revisit this if anything changes. It's how I'm seeing the charts at the moment. I'll let you know. In terms of the broader market, I just want to touch on the interest rates. So this is the US 2-year yield. Now, we can see that overall, if we zoom out, we likely put in this top back in October, and now we're at this double top scenario where before the Fed meeting, the market was starting to expect that we could be pushing back up higher, but now based upon Jerome Powell saying they're still planning these rate cuts, the market has accepted that for the time being, and we've moved back down lower. So what I want to see is if we can break through the bottom of this range here and really start making new lows, this is going to be extremely supportive of asset prices. And it's also nice to see that the market, at least to some extent, believed the Fed and what they were saying and has priced that in through actually selling off once getting that dovish bias from Jerome. So we're going to keep an eye on this, see how it plays out. It's reasonably fair to say that if you were to look at this chart and see us making new highs, I think asset prices in terms of like the NASDAQ, the share market, your cryptos, they're very likely going to be going down, at least in the short to medium term. And the same is true if we continue down, right? So if we continue down, that will represent an easing of financial conditions, suggestions that there'll be increased liquidity in the medium term, and assets should perform really, really nicely. Okay. Now, the biggest reason why I'm still very bullish, right, at this time is the fact that traditional markets are just in this relentless move up here. So this is the S&P, and you can see that this is the highest weekly close in the asset's history, and it's a really strong move. Now, we saw the S&P put in new all-time highs back in December, well before Bitcoin. So to me, it feels like crypto is lagging the traditional market by around a quarter or 3 months. So if we see the S&P and NASDAQ continue to make new all-time highs, it is really suggestive that crypto is likely to do the same over time, okay? Now, obviously, when we've got the weekly chart out and we're talking over longer term timeframes, this isn't something you trade on intraday or over short periods. You need to broaden your time horizon if you're going to use this information, and I suggest you do. One of the biggest fallacies that people get into, not understanding the structure of financial markets, is overtrading. Overtrading is really not good for you. And I know the reason I can talk directly to you is I know you're a retail market participant and you incur fees every time you make a trade. And also you don't have the technology to outcompete people doing high frequency trading. So when you're in the market intraday, right, like, and you're participating really regularly, you're coming up against those Harvard PhDs who have got their computer systems optimized for quick trading, those bots that are really just optimized for this domain. Also, you're paying transaction fees and exchange fees when you're getting in and out of positions, and these things add up over time, okay? So in general, I suggest having more of a medium term to longer term mindset on the markets, and it's definitely what I've found the most success with. Now, do note, that runs contrary to the interests of exchanges or YouTubers, because a lot of people will profit off that, right? So your fees are their profit, and they're going to incentivize you to be trading more quickly, feeling active, but you don't need to do that. Take a second and realize how people make the most money, and that's simply by buying and holding good assets over time. So don't get too caught up in trying to time tops and bottoms. Buy stuff you believe in and hold it, right? Hold it for the long term. Now, also just looking at NASDAQ, the NASDAQ's telling a similar story to the S&P, but to be fair, it is looking a little bit more toppy just in the chart structure. But guys, when we've made a move like this, which from the lows is nearly 100%, so we've nearly done a 2x, not quite, but 75%, it's a pretty strong move from the lows for traditional markets. It's completely healthy to get corrections. It'll feel like the world's collapsing if we do test down here a bit, but man, it's nothing to get concerned over when you have a secular trend to your back. Like, here's a simple question. Is the world going to be more impacted by technology tomorrow than it is today? Okay. What do you think? What do you think? For me, that's so obvious, I'm not going to answer it. Second question. Are we likely over the coming years to see increased liquidity or decreased liquidity? Now, that also is really obvious to me because we're in this trend from 2008 where liquidity over time is trending up massively in line with increased government spending and budget deficits. So for me, all systems are a go. But the key point is what time frame. Because if you're looking at shorter term time frames, the markets are well due for a more meaningful correction. And the same is true for crypto, right? Like the meme season we've had and all this stuff around private sales, like, man, that is a sign that there is at least short-term overheating. So if you're more interested in the short term, a lot of this analysis isn't going to be that meaningful for you. And you need to realize that, okay? Now, just to change directions, I told you guys that the beautiful thing about this channel is we're going to combine the degeneracy, the stupidity of the crypto markets, the 100x potential with actually seeing what's happening in TradFi and the real financial world per se. But I do want to introduce you guys to my thesis on memes. Now, those of you that have been here before, Insurgents or different places where I've put out my work, this isn't going to be new, but I want to take everyone through this to understand the opportunity and then connect the dots for yourself and consider if this period of correction, where we could see markets broadly trending down, could present an opportunity if you haven't positioned yourself yet. So why are memes bullish? Firstly, institutions are trading meme coins. Guys, like that's crazy. But institutional volume is making up a significant portion of meme coins. Now, this is actually logical when you think about it, despite how crazy it sounds on the surface. With meme coins, everything is on chain. So institutions can deeply analyze the dynamics of what they're investing in. And this gives them confidence. There's no team to mess stuff up or to dump on you. Because if you invest in something like I'll give you an example. Say you invest in Arbitrum, which just had a really significant unlock recently. How do you price in what those investors who are getting drastic unlocks are going to do? If you wanted to long Arbitrum because of the fundamentals, it really makes that decision harder for you. Whereas if you've got everything on chain and transparent, it's pretty much an easy decision. Also, marketing is really cheap, okay? People understand memes intuitively, meaning there's low barriers to entry. So this presents an opportunity. If you want a meme to proliferate or to spread your narrative, you can do so through paying off influencers, manipulating the algorithm, spreading a narrative. And we can see that happening right now with Brett, right? So I want you guys to pay attention to what's going on. You can see that Brett is part of a coordinated influencer campaign to pump this stuff up. And that means that they likely will do this again in the future, but it might not be the best time to enter now. But you decide for yourself, all right? Now, retail also really love meme coins. They understand them intuitively. It's what your Robinhood crowd, your Coinbase crowd, your Binance crowd are going to want to be doing. And when you combine that with Dobe and Shiv from last cycle, hitting like 40 billion, 80 billion market caps, they really laid the precedent and understanding that memes have value and have the ability to pump and outperform everything else on the market. All right. Now, the biggest reason why I like memes is because the entirety of cryptocurrency is a meme. All right. Bitcoin's a meme. We literally memed a $1 trillion+ asset into existence. Most projects, they don't do what they say they will. They are vaporware. And they will go down 90%. At least meme coins are honest to you about this, right? You're buying a picture of the frog, picture of the bear. Whatever you're buying, like a dog with a hat, man, there's no idea that this is the future of finance. It's really, I would say it embodies a lot of the ethos of crypto. And it's a bit of a FU to VCs and the TradFi world. So this is my thesis on why memes are going to be the best performing asset class of this cycle. And I truly do believe that. And the king meme this cycle is none other than the frog, Pepe. There already has been a really significant move in this. And I was calling this back in the day insurgents, but that doesn't mean anything, right? We're in a new system. It's fine. We'll be sharing more calls in the future. But from there, it had essentially a 10x move. And now we're consolidating around these highs. To me, this looks brilliant because we've put in such a huge impulsive move up. And the fact we haven't even tested lower just shows to me the strength of this asset. It really is, in my eyes, the blue chip meme of this cycle. And if crypto was to continue higher, Bitcoin breaking above 100K, Ethereum making all-time highs, man, I think this is going to do really, really well. So we'll be following this up, seeing how it unplays, digging into other memes. But if you get it, just getting into this stuff, I think something like Pepe is a really good place to start because at the end of the day, it has been around for a while. It's got a team that isn't going to rug you. It's such a well-recognized meme. And if memes are to do extremely well, there's pretty much no chance Pepe doesn't, right? It's like this really nice blend of a pretty sure pick of something that could do a 10x, 100x if the market, well, not 100x, we're a bit too big for that. I got ahead of myself, but that 10x if the market is in a good state. Now, that's pretty much everything for today. I'll be leaving it off here and joining you again tomorrow, but do follow, do like, do subscribe, depending upon where you're getting this content. And I'll be putting these videos out every day. And if you're here, you're in a right spot because I do think crypto is poised for a really exceptional period over the coming weeks and months. And to that extent, you are still early. So thank you for joining, and I'll see you again shortly.